finance. Recording progress. Those who are doing public sector and finance. And is on that is on Fridays. That is on Fridays. So for the time being, as and when what do you call as and when there's a need, then Prof comes in. Prof is uh, the lead tutor. So I'll be handling these two subjects for the meantime. So what if you check the ICA syllabus, that's the 2024 syllabus, which Prof did the syllabus walkthrough. If you check the what you call the advanced taxation, we're supposed to do something. I think the first topic has to do with communication with GRA, that's tax administration. And tax administration is something that is very, very important. It forms I think it's 10% of the total the total marks that you'll be getting. So it means that 10 marks will come from tax administration. So today, being the first time, we are going to look at tax administration in Ghana. The tax administration in Ghana have actually gone in have evolved over time. It have gone through several changes. Recently we have um, so I'm just going to give you a brief background before we go through what you call the questions. As was mentioned, this is a Pasco RAS hour. But before we proceed, just give a background because um, we'll have to get the concept before we can solve the questions. So the GRA was not initially GRA, it was internal, it was divided into three units. We were having the Internal Revenue Service unit, we're having the value added tax unit, we're having the preventive unit. So it have actually gone into several phases, and then in 2009, there was an act that was established. That's the Ghana Revenue Authority Act 2009, Act 791, to establish the Ghana Revenue Authority. That is to consolidate these three units into one authority called Ghana Revenue Authority. And when that happened, the authority now currently have three divisions. We have the custom division, we have the support service division, and we have the domestic tax revenue division. And all these divisions are headed by commissioners. So we have three commissioners reporting to the Commissioner General. Three commissioners reporting to the Commissioner General. Now, the Commissioner General is the head of the Ghana Revenue Authority. He's the head of the Ghana Revenue Authority. And then there's also a board. The board determines how the day-to-day activities have been run. So that is just a bit brief, what you call uh, background. And as we know, the GRA, one of their functions is to what? To identify the taxpayers, assess the taxpayers to tax, collect the tax, and pay into the consolidated fund. I think some time ago, somebody asked if GRA, those from GRA, if you ask them how is the tax being used, the simple answer they will give you is that our mandate is to identify the taxpayers, assess them, collect the tax, and pay into the consolidated fund. That is why their mandate ends. As to how the taxes are being used, they don't it is another institution, that is the Ministry of Finance, that's determine how these taxes are being used. So, as a taxpayer, they are both the taxpayer and then the Commissioner General. there must be a communication between these two persons. So that is what we are actually coming to look at today. So uh, there are instances where, as I made mention, every night you get like 10 marker questions from communication with GRE. Communication with GRE. Who can give us some examples or instances that we can say that this is a form of the taxpayer communicating to GRE or the GRE communicating to the taxpayer? Anybody with uh, who can help us? Okay. A clear example is the tax returns we filed. The clear example is the tax return we filed. This is an official statement by the taxpayer communicating the activities that actually take place in the business to the Commissioner General. You are detailing both your your income and both your expenses to the Commissioner General. So it's a form of communication. And that is why when you are filling the form, you have to declare that to the best of your knowledge, the information you are providing are accurate and complete. The information you are providing are accurate and complete. So now, these questions were taken from what you call the ICAG, I think from 2025 to 2015. They were taken from this particular years. So the first question have to do with um, the exam. So please, before I continue, if there is question on guess the background, the brief background I've give, I will take it before I continue to read the questions and explain them. If there are questions, I'll take them before we move. Okay. So the first question has to do with practice note. Practice notes are issued by the Commissioner General of the Ghana Revenue Authority by publishing a notice in the Gazette or on the website or in at least two daily newspapers, national in character. And the examiner says that we are required as a tax finalist working with Cato Chartered Accountant, that's an audit firm, to explain to your study partner for purpose of issuing practice note. This was the question that came. Now, the practice notes, now we have to ask ourselves, there are instances where the examiner has asked students to explain what is practice note, what is class ruling, what is private ruling. These are administrative tools. Now, practice note, these are notes that have been issued by the Commissioner General. And the Commissioner General is mandated by the Revenue Administration Act 2016 Act 915 to issue practice note every year. These practice notes are issued by the Commissioner General to interpret section of the tax law, section of the tax law, because of what? Uniformity and consistency in applying the tax laws. And this interpretation is actually to help the tax officials, that's the GRA staff, the tax consultants, and the taxpayers in applying the tax law. In applying the tax law. So before you can actually proceed to answer this question, you need to define what is a practice note. What is a practice note? And I've just defined what a practice note is. Now, the question is actually asked to explain to the partner the purposes of issuing the practice note. Now, this practice note are to give clarity, as I made mention. It is the Commissioner General interpretation of the section of the law. So the Commissioner General can say that, okay, section 14 of the Income Tax Act A96, which talks of capital allowance, the Commissioner General can take that particular section to and come out with how the capital allowance will be treated. So it means that the Commissioner General is going to interpret section 14, that is capital allowance, so that everybody will be guided when it comes to capital allowance computation. So that is basically the understanding of what we call practice note. And these practice notes are issued by Commissioner General. And let me say before I continue, I made mention that the GRA have three divisions. There are some of the what you call the powers of the Commissioner General that can be performed by, let's say, a senior revenue officer. A senior revenue officer. If you check the Revenue Administration Act 2016 Act 915 and the Income Tax Act 896, it says that a senior revenue officer can represent the Commissioner General because the Commissioner General cannot be everywhere. So this person can assume some of the powers of the Commissioner General. That is why when you come as part of the right of the taxpayer, a GRA staff comes to your office, you are supposed to ask them for their ID. So there are some of the powers of the Commissioner General that cannot be performed by senior revenue officers. This particular responsibility cannot be delegated by the Commissioner General. Sometimes it is only the commissioners, the three commissioners, that perform these duties or this responsibility on behalf of the commissioner. And one of them is issue of practice note. You see that if they issue the practice note and the Commissioner General have not signed, you see a commissioner will sign for. So it means that all this cannot be delegated or performed by a senior revenue officer. Another one is compounding of interest or waiver of interest. It is only the commissioners that can perform this function on behalf of the Commissioner General. So having given this background and having explained what a practice note is, let's look at the purpose. One is to what? To give a clarity and provide guidance to all officers of the Ghana Revenue Authority, tax consultants, and taxpayers. Now, the issue. Now, the Commissioner General issued a practice note in order to ensure what? Uniformity and consistency in the administration of the tax laws. The tax laws are not uniform. And because of that, the Commissioner General always come out with a practice note to ensure that there is consistency in the application of the tax law. It also provides guidance, as I made mention, to the officers. Then it enables taxpayers to know the tax consequences of their business and transactions. Everything will be interpreted in that particular what we call practice note. Now, that has to do with the first question for 5 marks. So what we do is that you have to always introduce, do your analysis and then conclude. That is how we answer the questions. So sometimes if you have to do with interpretation or analysis, you have to also, after introducing, you have to state the position of the law before you can apply it to the case and you draw your conclusion. But we'll get there when we get to tax planning and the rest. We'll try to do that. But this is more or less straightforward. Communication with GRA is quite straightforward. There's also another question where the examiner was saying, I asked students that you are a tax consultant and Assistant Atu is one of your clients. She has just told you that she is in a bad state because she cannot file her tax returns by the due date and cannot meet her tax payment deadline for 2022 year of assessment. Required. Address her concern by briefing her on the following: extension of time for the filing of tax returns, extension of time for the payment of the taxes. I made mention that one of the ways of communicating with GRA is our filing of our tax returns. Now, most of the tax returns, we have a date of filing, date of payment, and that is why if you don't file, all these things attract penalties. For example, withholding tax and PAYE, the law requires that we file this on or before 15th of the following month. For example, if let's say Musa Company Limited, Musa Company Limited withheld taxes from employees or withheld taxes when they are making payment for goods and services, the law requires Musa Company Limited as an agent for the Commissioner General to remit these taxes. So if these taxes actually happen in November, the law requires that by 15th of December, on or before 15th of December, Musa Company Limited have to what? By law, remit all these taxes to the Ghana Revenue Authority. That is what the law says. So a date of payment and date of what do you call date of filing and date of payment is the same day. You file and you proceed to pay. So now the examiner now asks us that, assuming that the client says that he is unable to meet the deadline, and don't forget, if you, per the law, the Act NICC, if there are penalties if you are not able to meet, file, and pay. For example, the taxes are made messy, the withholding tax and the PAYE. The law says that if you are able to pay, if you are unable to file and pay, that means that you have not met the what? The deadline. There is a penalty. And what is the penalty? The law says that you pay a penalty of 500 Ghana cedis plus 10 cedis for each day the default continues. And it's compounded. So that is why you see some of these penalties is being put in there for us to what? Do the right thing in terms of tax compliance. You can sit in your office, although we are doing self-assessment. The Commissioner General is not in your office. You think whatever you are doing, you can try to do whatever favors you. But the day the Commissioner General will storm your office for tax audit, that is where you understand that it is better you have what? Comply. Now, so let's now go into to answer the questions. I have given you the background. And I use some two type of taxes, that the withholding tax and the PAYE. These are supposed to file on or before 15th of the following month, and I've given you a scenario. Now, this particular client is complaining that he is not financially good to file and pay these taxes. And then the examiner has given you a specific areas to address, that he want to ask the Commissioner General for extension of time to file. The law says that that is section 30, subsection 1 of the Income Tax Act. It says that a person is required to file a tax return under the tax law to the Commissioner General. But if you are unable before the deadline, you don't wait till 15th and you now send a letter to the Commissioner General asking for extension. No, that's not what the law says. The law says that before the deadline, you are supposed to write to the Commissioner General asking for time, extension of time for the filing of the returns. You write formally, and this must be in what? Written. And you state precisely the reason for the extension. Now, the law says that if the Commissioner General received that letter and he thinks that the reasons for the reason stated is he's satisfied with the reason stated for the extension of time to file the returns, the Commissioner General will grant you that request. And most of the taxpayers, they do it. If you know that you will not be able to meet the deadline, quickly you have to write to the Commissioner General before the deadline. So the application must be in written, and you must state your reasons for requesting for the extension, and it must be made before what? The due date for the filing. So the Commissioner General may also by written notice. So you have written to him, you have to respond whether or not he have accepted to grant you that extension of time to file your tax returns. Now the Commissioner General will also have to respond. So if your application is reasonable, then the Commissioner General will grant you that extension. So the extension under the law must be subject to terms and conditions that the Commissioner General consider appropriate. That the Commissioner General consider appropriate, including payment of a security. And the Commissioner General may also grant multiple extensions. So if you apply and then for extension and it is granted, and then the deadline is approaching, and you know that you have not still gotten the money, you can still apply for the Commissioner General to extend again for you to get time to be able to what? To file. That is the multiple extension. But the law is clear. The law says that the multiple extension shall not in total exceed 60 days. And 60 days, we all know that that will be what? 2 months. The law says that the multiple extension shall not exceed 60 days from the date the returns was original to be filed. So you don't count the 60 days from the initial extension. You don't start counting. You have to start counting from the initial first time you apply for extension of time to file. That is the original date. Now, so that is what you can do under the extension of time to file. Now, the examiner also made mention that the extension of time to pay. And then one thing is that you can file. It means that you have fulfilled one of the obligations. And now you now left what? The payment. The filing, you don't lose anything. You just sit in your office, go to the GRA website, and you have your document uploaded to the GRA, and then you now wait to pay. So you can do them one after the other. That is in practice. Now, the extension of time to pay. The law says that you can also apply to the Commissioner General asking him for extension of time to pay. That is, if you are having difficulties. And per the question, the examiner says that the client have what? Difficulties in filing and then payment of the taxes. So the Commissioner General may also extend the time for you to what? To pay. That is, if your reasons are what? To his satisfaction. And all these requests must always be in what? In writing. So the extension date on which the taxpayer or part of the tax is payable on the returns and conditions that the Commissioner General may consider appropriate, including what? You have to deposit a security. You have to deposit a security. Now, when the Commissioner General make a decision whether to grant you that extension of time to pay, then the Commissioner General will also write to you. That is then notifying the applicant in writing of the decision. Now, so if the Commissioner General, the first extension, if the Commissioner General grants you, the law says that you can also apply. That is multiple requests. But the law is clear. It says that the Commissioner General in total of the extension should not exceed 12 months. Should not exceed 12 months. And the law is clear. If the Commissioner General grants you the extension of time to pay the taxes, and you default in paying the taxes per the agreement that you have submitted, the law says that the whole tax balance outstanding become payable immediately. So it means that you are going to now pay everything immediately. There will not even be a room for you to submit a payment plan, because you have actually gone against what you told the Commissioner General. So please, this is we have actually looked at two questions. I'll pause here and get feedback from you. If you have a question on what we have discussed or outside what we have discussed, it has to do with tax administration, I will take it before we move on. Hello? Please, can I be heard? Hello? Hello?
Please, no question for now.
Okay, then let's proceed. Now, the other question that came was the examiner free 10 marks. 10 marks. It says the private ruling, class ruling, and practice note do not serve the same purposes. Write a memo to your tax manager of your company as a tax intern explaining how each is used and their effect on tax administration in Ghana. As I said, these are communication between the taxpayer and the Commissioner General. Now, before I go into the question, let me give you a background. You see, because it is a Pasco rush hour, sometimes I have to give you the concept before we go into the solution and I'll explain. Or else, if we jump into it, it will be some way. The understanding will not be there. Now, one will ask, what is private ruling? What is private ruling? Private ruling is a ruling by the Commissioner General where an individual taxpayer who wrote to the Commissioner General for interpretation of the treatment of a transaction. And I'll simplify that for you. So let's say that Clement Enterprise want to enter, like for example, Clement Enterprise is contemplating how to tax allowance paid to directors. Allowance paid to directors of Clement Enterprise. Now, the accountant in Clement Enterprise wrote to the Commissioner General asking the Commissioner General of his position or how this particular allowances paid to the directors should be taxed. Now, if the Commissioner General receives this request from Clement Enterprise and respond to Clement Enterprise, it means that this ruling by the Commissioner General is for what? One taxpayer. It's for one taxpayer. So it means that, let's say, if Musa Enterprise is also in the same industry and facing the same challenge, Musa Enterprise cannot rely on Clement Enterprise ruling because it is what? Private. So what the private ruling does is that you cannot rely on it. It is only directed to one taxpayer. While the Commissioner General is explaining the treatment of a transaction. And in practice, the easy way, if you have issue with how transactions should be treated, the easy way is to write to the Commissioner General for his interpretation. It always saves you the time to, let's say, go to do the wrong thing and later on they have to come and correct it. Which the correction will either come with a penalty. So that is a private ruling. So the private ruling, it is the individual taxpayer that have to write to the Commissioner General asking him for his interpretation or how a transaction should be treated by the tax law. And when the Commissioner General reply to that particular taxpayer, stating his position of how the transaction should be treated, then it is deemed to be called a private ruling. So it means that only that taxpayer can use that ruling. No other taxpayer can rely on that ruling. So that makes it private. Now, what is now class ruling? Class ruling is where a group of taxpayers come together and write to the Commissioner General for interpretation of how a transaction should be treated. And when the Commissioner General reply to that particular ruling, it means that anybody who is a member of that particular group can rely on that ruling for the treatment of the transaction. And I give you a scenario here. And this is even in the public domain. If you go to the GRA website, you see it. Now, there was some time back in Ghana, we have the Ghana Bankers Association. Ghana Bankers Association. They wrote to the Commissioner General on how the clothing allowance to be taxed. Clothing allowance. You know, in the banks, they give them clothing allowance. You see them, they are always in suit and the rest. They give them clothing allowance. So they wrote to the Commissioner General. That Commissioner General, we want you, how do you expect us, per the tax law, to tax the clothing allowance for all Ghana Bankers Association? Now, the Commissioner General responded to say that any allowance that is being paid in relation to clothing allowance and that clothing cannot be wear outside work, that particular allowance is exempt from tax. Please listen and listen carefully. I'm not saying that all allowance paid in respect of either your uniform allowance or clothing allowance, depending on how you want to look at it, are exempt from tax. I am saying that the commissioner ruling was that any uniform or any clothing that cannot be wear outside work and any allowance paid in that respect is exempt from tax. And the Commissioner General went ahead to explain that a clothing that cannot be wear outside or a uniform that cannot be wear outside are the Ghana Police Service, the Ghana Prison Service, the Ghana Immigration Service, the Ghana Armed Forces, the Ghana all the the security services in Ghana. I am pretty sure, Gloria, if you are celebrating your birthday and your friend is a prison officer or fire service, I don't think your friend will wear that uniform to your birthday.
Yes.
No. So it means that that uniform cannot be worn outside work. You get it? Now, and when it comes to the private sector, you see that the employer will go for a buy a clothing or come out with a cloth that all, if you look at the clothes, all the logo for what you call the employer is written in the on the set. It means that set you can't wear it outside work. So let's say that Clement Enterprise is actually giving this to staff, and all the everywhere you Clement Enterprise is written everywhere. If you're organizing your birthday party, I can't wear that set to that party. So that is what the Commissioner General meant by clothing that cannot be worn outside work. Now, that was clearly explained by the position of the Commissioner General. Now, what this means is that that particular ruling that was given by the Commissioner General was a class ruling. Why is it class ruling? It is class ruling because if myself and you, we are part of the Association of Bankers, we can rely on that ruling. Because it is a group of taxpayers that came together to what? To apply to the Commissioner General for his interpretation. Recently, you saw these people, the assemblymen, and that was led by the local government minister. They wrote to the Commissioner General for interpretation of the allowance paid to the assemblymen, whether or not that allowance are taxable. You get it? So it means that that ruling, if you are a member of what? If you are an assembly member, it means that you can rely on that ruling. Because it is what? A group of assemblymen that are what? Different taxpayers that actually come together to seek the interpretation of that particular transaction. That is allowance paid to them. And the Commissioner General was clear. You see, because it is rush, this thing, I will not go much into that. But the Commissioner General actually responded that that allowance should be subject to tax. Now, for practice note, I have explained that. So now let me go to the question. Please, there are difference between when you are asked to write a memo, a report. For report a memo, the structure looks what they call similar. But when you are supposed to do briefing note presentation, it's different. For example, if you're asked to write a briefing note, it means that you must give us what they call some highlight, brief of what you are going to talk about before you come and give us the details. Or if you are going to do a presentation, it means that you must give us the what? The presentation outline. Okay, I'll start with the introduction, or the presentation is done by this person. I'll start with the introduction. I'll talk on this, and I'll conclude. So you come and, as we are marking, you follow that particular guide under the outline of the presentation. But this was pretty simple. They said we should write a memo. So the memo is going to the tax manager from the tax intern, and the subject is private ruling, class ruling, and practice note, and their purpose. Now, I always say that you have to introduce. You see, the marking scheme always say that any student that introduces and concludes should be given 1 mark. And that is what we always call professional marks. You don't just walk to somebody, you are a tax consultant. This is advanced taxation. You are a tax consultant. Now, you don't just walk to somebody and start talking. You have to give background of what you are going to talk about. So you have to introduce and then tell us what this particular what you call item you are going to talk about, what they are. So when you are done, then you take them one after the other to explain, and you draw your conclusions. Okay. Now I've explained what a private ruling is, and I did mention that this is always requested by the taxpayer from the Commissioner General to provide guidance on how some transactions should be treated. Maybe if you are about to enter into that particular transaction, or you are already in it, and I cite an example of the taxation of the director's allowance. Now, it must not be hypothetical, and this particular private ruling is bounded on the Commissioner General and the taxpayer until it is being revoked. It means that you have to, because you apply, you have to make sure that you use it till the Commissioner General revoke that ruling. The class ruling, as I made mention, is a group of taxpayers with common interest. For example, whether you want to go in the direction of the Ghana Bankers Association or the direction of the assemblymen. This just happened this year. Now, it means that it is only applicable to persons in that group. If you are not a member of these two groups, you cannot use that particular ruling. Okay. Now, for practice note, I have explained that the practice note, they are issued by the Commissioner General. Please get the difference clear. The private note and the class, the private ruling and the class ruling is always a request to the Commissioner General to respond on the treatment of the transaction. But the practice note, the Commissioner General is mandated by the law every year to come out with the practice note. Do you get it? Now, when the minister went to the parliament to and read the 2026 budget, what we're expecting is that we're expecting the GRA to come out with a practice note on how the levies should be decoupled, where we will now have a flat rate of VAT of 20%. So it is a law that requires the Commissioner General to issue the practice note. It is not a request, but the other two is a request by the taxpayers. Now, we have to now conclude, and then we have to state the purpose. For the purpose, it aids the taxpayers in trying to what? comply with the law. All this is for us to ensure that we are tax compliant. And if you are tax compliant, you can get your tax clearance certificate if you want to either bid for a what do you call a contract, or you want to clear your things at the port. So that is one of the purpose of being a compliant taxpayer. Now we have to now conclude, and you sign and you write your name. Now I have actually exhausted that. Now, please, if there's a question, I'll take it. If there's no question, then let's proceed to look at the other area. Don't forget, it is tax administration. It is between the tax authority and the taxpayers, or the tax authority and the public. Okay. Now, the next question is that you are the financial accountant of Zato Limited, a company set up to manufacture toilet rolls. Management is dissatisfied with a tax decision by the Commissioner General, and you have been asked to determine the way forward required in reference to Section 42 of the Revenue Administration Act 2016 Act 915. Advise management on the responsibility of the company and the responsibility of the Commissioner General in resolving this. Very simple question and very easy to harvest the 5 marks. Now, let me give you the background. You know, initially, those days, we were using something we call Commissioner General Assessment, or Provisional Assessment. So what the GRA does those days is that they'll come and look at, Gloria, if you have your enterprise, they come to you. Sometimes they do the benchmarking. Maybe you are in the enterprise, they'll check your sales, look at the history and all those kinds of things, and say, okay, this year they think you can make a profit of 1 million Ghana cedis. So it is that 1 million that will be the provisional assessment pending the Commissioner General final assessment. So it means that you have to make sure that you multiply if it is a normal company, 25% on that amount, and then you pay as your corporate tax quarterly, pending the Commissioner General annual assessment. And this was giving the Commissioner General a lot of issues. You agree with me, Gloria, by the end of the year, if you are not able to make the 1 million, it means that you probably overpay taxes to Commissioner General,
Yeah.
the GRA.
Yes. Yeah.
Yes. So if you do that, then you have to take them on. So there was a lot of litigation issues, sending Commissioner General left and right to court. And say, okay, now let's move from the provisional assessment to self-assessment. Now sit in your office and give us what you think you can make. And that is why, as we speak, all companies, or now we have shifted from the provisional assessment to the self-assessment. Now, the self-assessment, you are supposed to sit down and evaluate yourself, come out with your estimated chargeable income, charge the tax, divide it by the quarters, and each quarter you pay. So per the law, you are supposed to file your self-assessment with the Commissioner General, and the law makes it clear. If you think that within the year, the first assessment, the first estimate you submit to the Commissioner General, there are indications that you either will get the more or less. The law gives you the power to revise the assessment. Please, woe betides you if you under-assess yourself and then you don't revise the assessment and the year comes to an end. Because, you see, the law says that the law only gives 10% of margin of error. So your assessment must be 90% accurate. So when the Commissioner General staff comes to do this assessment and they try to check and realize that you have under-declared your revenue, don't forget, after they have established, so what they'll do is that they'll come out with their own revenue per the records you are going to present to them, and they'll match it against what you have been filing with them. Now they'll be able to establish the difference, and they will come out with the outstanding taxes. And you know what? The law says that they should calculate interest on that particular tax outstanding, and the interest is 125%. multiplied by the Bank of Ghana root discount rate at that particular time. Then you now multiply by the outstanding tax liability, compounding monthly. And you now see how the amount of taxes you pay to GRA if you have done the right thing. Please, all together. Now, having given you this perspective, moving from provisional assessment to self-assessment, the law says that you can, after you have self-assessed, and the Commissioner General comes to do his tax audit, after he has issued his what they call the tax decision to you, please, you cannot object when the what they call the Commissioner General have not served you the notice of the assessment. I think somewhere last year they were making fun of our respected member of parliament, Afeyo Marquis, when Bagbin was about to rule on the crossing of Quebec. Before he comes to rule, he was in court already, Supreme Court already. Please, you cannot do that. You only object to the decision of the Commissioner General when the Commissioner General have served you the notice of assessment. If you don't receive the notice of assessment, what are you going to object to? You get that? So now, Section 42 talks about the objection. Now, the law says that if the Commissioner General assesses you and you think that the Commissioner General assessment, you are not okay, you are dissatisfied with the Commissioner General assessment, the law gives the room to object. Now, quickly, I'll go through the structure, how you can follow to object before we come and look at the conditions. Now, the law says that if you want to object to the tax decision of the Commissioner General, first of all, you have to write to the if that particular issue is in relation to the domestic tax revenue division, you have to write to the commissioner. If the commissioner is not giving you the response, then you can write to the Commissioner General. But the law gives you the room. If you think that you want to write straight to the Commissioner General, you can write straight to the Commissioner General, lodging your complaint. And the law says that you have 30 days to object after you have received the notice of assessment. So after writing to the Commissioner General actually didn't handle your issue well. Now, previously, the people go to court. Currently, you cannot do that. Now, they have come out with something called the Independent Tax Appeal Board. So when the Commissioner General handle your objection and you are dissatisfied, both the taxpayer and the Commissioner General have the right to refer the case to the Independent Tax Appeal Board. This is a 11-member committee chaired by a Supreme Court judge. Now, when the law says that when the Independent Tax Appeal Board now comes in to look at the issue between the taxpayer and the Commissioner General, and the taxpayer is still not satisfied with the ruling of the Independent Tax Appeal Board, the law says that the taxpayer and the Commissioner General, both of you have the right to now go to where? To the court, to the High Court. When you go to the High Court and the High Court rule and you are not still satisfied, you can go for Court of Appeal. From the Court of Appeal, if you have not still satisfied, you can go to the Supreme Court. And the Supreme Court is the apex court in Ghana. So if they rule and you are not okay with it, most of the issue that have to do with international tax, because of we have actually signed some of the OECD and then the UN Model Tax Convention, some of the cases are referred outside Ghana. And then a clear example is, I think last year or something, Talu Ghana had an issue with, I think it was the former Attorney General that actually presented Ghana, and they have won. Talu Ghana won the case. So that is just the procedure to go about it. Now, what is the conditions? Under section 42, 43, 44, and 45 of the Revenue Administration Act 2016 Act 915. It says that if the Commissioner General is, if the taxpayer is dissatisfied of the Commissioner General decision, the taxpayer must object to the tax decision within 30 days. How many days? Within 30 days. And you must state clearly the reason for your objection. You cannot just walk to the Commissioner General office and say, "And this." No, no. It must be in written first, and you must state clearly the grounds for your objection. If your objection is ambiguous, the Commissioner General can refuse to look at it. Now, because the law is clear, the law has given you how to go about it. Now, the law says that if you object, listen, these are the conditions. If you object to the Commissioner General decision, the taxes you are objecting, you must pay 30% of those taxes. For example, if the Commissioner General comes to do the assessment, you can't say that everything the Commissioner General has done is you are not okay with it. No, no, no. That is not possible. Do you get it? So if the law says that if the taxes that is in dispute, let's say you have problem with the Commissioner General, how he compete withholding tax, how he compete PAYE. The law says that the total of these two taxes, you must pay 30% of the taxes in dispute. And you must pay 100% of all the taxes that you don't have issues with them, plus all the indirect taxes to the Commissioner General before the Commissioner General can entertain your objection. I think some of the tax practitioners have petitioned the Commissioner General on this, about this 30%, but the Supreme Court threw the petition away. And then they are saying that the taxpayer can apply for the waiver, suspension, and variation of the 30%. Now, what does the Commissioner General also do? Because it's two sides. The question asks us that what would the Commissioner General do and what would the taxpayer do to resolve the issue? The taxpayer has 30 days to what? To apply to send the request, right? The Commissioner General also has 60 days. So immediately you send your objection letter to the Commissioner General. From that day, you start counting. 60 days, the Commissioner General must reply. That is the law. Now, the law says that after 60 days, you, the taxpayer, can write to the Commissioner General. That's 60 days plus 1. You can write to the Commissioner General, telling the Commissioner General that your silence means that you have not made a decision to disallow my objection. Please get it clear. After 61 days, the law says that you can write formally to Commissioner General and say that your silence means that you have not made a decision to disallow my objection. Now, the law says that the Commissioner General have the power to waive, suspend, or vary the 30% request. Because they are saying that if you are objecting, you must pay 30% of the taxes in dispute. Please, all together. Now, the Commissioner General may also approve your request or decline it based on whatever that is contained there. And the Commissioner General may communicate or not. Now, so that is how the objection to a tax decision is determined under Section 42 of the Revenue Administration Act 2016 Act 915. Please, it is good you get some of these acts so that after that you can refer to them. They are online. Okay, quickly, let's also look at this quickly, although it is time, but let me look at this one too, maybe one or two, and then we can bring the section to an end. Now, another question that came was, in reference to Section 68 of the Revenue Administration Act 2016 Act 915, advise management on the responsibility of the Commissioner General in refunding tax paid in excess determined by an order of court or tribunal, or by an application for a refund by a company. 5 marks. Very simple. You know, there are instances where companies overpay taxes. Now, just by way of brief, giving you a background of perspective, the previous law, prior to the new minister responsible for finance, my respected mentor, that's Atu Forsen. You know, the law says that the GRE is supposed to open a general refund account general roof fund account to take care of roof fund activities that may be requested or demand from the taxpayers. So the law says that previously, set 6% of the total revenue generated for the period. That is for what you call a year, 6% into the general what do you call the general roof fund account. Now, when Atu came, he said that he had done his research and he realized that Ghana, we have not paid a roof fund exceeding 4% of the 6% of the total revenue we set, 6% of the total revenue generated for a period, that is within a 12 month. His research shows that we have never paid any roof fund exceeding that amount. Therefore, the 6% was revised to 4%. Okay, now, so the Commissioner General is prepared, and that is in Section 68 of the Revenue Administrative Act. Now, please, if you can't just see some of these things, I always say that he who seeks equity must come with clean hands. If you apply for a roof fund from the Commissioner General or the GRA, they don't just wake up to say, "Oh, Gloria, come for your check" or something like. No. They have to do an audit. They have to conduct. So it means that you are subjecting yourself to an audit. For them to come and unveil that the taxes that you say you have paid in excess is actually true, and they are certified with your request before they can proceed to give you the refund. And even the refund, the law is clear. It says that if you have a refund, now the Commissioner General should check whether you have any outstanding tax liabilities with the Commissioner General. If you have any outstanding tax liabilities, the Commissioner General should match that against those tax liabilities. Do you get it? But the law establishes that after the audit, and if there is really you have paid taxes in excess, the Commissioner General must pay those taxes within 90 days. Within 90 days. Now, the law says that if the Commissioner General fails to pay those taxes within 90 days, interest must apply. After the 91 day, you have to start accruing interest on your overpaid taxes. And it is 50% of the statutory rate. But I don't actually see this being demanded by the taxpayer. You know, the tax authority and the taxpayer, we have to judge. So sometimes if they pardon you, you have to pardon them small. And because most of the things, when you look at Section 68, that talks about the refund. So most of the things probably you have to probably use it to offset other tax liabilities. I don't think the Commissioner General will give you a check for that. But I'm not saying that it's possible. That's what the law says. Now, so it means that you have to what? You have to apply to the Commissioner General, and then if it's established after the tax audit, there's what do you call a refunder to pay. The Commissioner General must pay that within 90 days. The Commissioner General must refund the excess if there's a refund. And if the Commissioner General fails to pay within the 90 days, there must be an interest that is accrued. So that is what we were supposed to write in respect of this particular question for 5 months. For 5 months. For 5 months. Now, with this was also a very simple question, which when the main class, when we teach, when we are actually going through, we will explore the ethical principles that guide tax practitioners and the ethical threats that guide tax practitioners. This was ethical issue that the examiner was asking students to write, and it was for 10 marks free. So let's quickly go through it. I think I guess I have some few minutes to be with you. Maybe we'll close 5:20 or 5:30. I think 5:20 is okay because we need to prepare. So it said the question 3 reads that at a recent workshop organized by Fami and Associates, a tax practicing firm, it was ego that as a tax practitioner or a officer of the Ghana Revenue Authority, it is absolutely important that one conduct affairs at all times in line with the professional code of ethics. It was mentioned in the passing that the fundamental ethical principles in the practice of taxation are bet with some threads seeking the foundation of these ethical principles. Participants at the workshop were, however, disappointed that the organizers did not outline and explain what these threats are. You are just qualified as a young tax consultant with a firm, and the managing director has tasked you to prepare a presentation to be circulated to the participants to address this disappointment. Required, write a report outlining the relevant issues considered as threat to ethical principle. Please, let me hear from you, the auditors, and those doing audit. Not even audit. You are students of ICAG. And because you are students of ICAG, ICA is a member of ADFAC. And so far as ICA is a member of ADFAC, all its members and students and associates are supposed to go according to the ADFAC code of conduct. That is why the ethical principles are stated. So let me hear from you. What are the ethical principles? Maybe this time they will not bring threat. They'll bring the ethical principle, and then you say, what is these ones? Who can tell us what are the ethical principles? That got professional accountants in Ghana. Hello, ethical principles. Gloria, give me one. If you
Professional
check the
behavior,
ICA logo, what do you see there?
integrity,
Come again.
integrity,
Integrity.
Integrity is one. What again?
confidentiality,
Confidentiality is two. There are five.
professional behavior,
Activity.
Professional behavior,
And Duke.
professional competence and due care. Level one.
Objectivity.
Okay. Level one.
Mm.
Or somebody has mentioned that. I'm talking about the confidentiality.
Yeah.
Okay. Place it all together. Now, these are the ethical principles that guide accountants. But they are also threat to the independence of the accountant, or they are threats to the independence of the tax consultant, or they are threat to independence of the what? The officer of the Ghana Revenue Authority, or they are threat to independence of what? The tax practitioner. And what are the threats? We also have about 5 or 6 threats to the independence of the tax practitioner or the officer of the Ghana Revenue Authority. And we have the self-interest threat. We have the self-review threat. The self-interest threat, where you have a financial interest in whatever the institution is doing. There's no way you can be objective. So let's say they are going to do something and they are promising you that if this particular deal goes through, you get like 10% of the total amount. You cannot be objective. You'll be biased. And if you are biased, it means that some of the ethical principles will be breached. Your integrity, your objectivity will be breached. So one is the self-interest threat. Another one is self-review threat. You are an officer of the GRA. You are the people doing the tax audit. After the tax audit, you ask the company that they should give you the chance so that you'll be filing their tax returns. You are the same person filing their tax return. You are the same person that will come back to audit it. Self-review threat. Advocacy threat. You are trying to promote or advertise the business of this particular client. That's what we call the advocacy threat. We have the intimidation threat and we have the management threat. So these were the things we were supposed to mention and get 10 marks. Very simple. Very simple. So we have for the format already we know. So threat to independence, we're looking at the self-interest threat. We're looking at the self-review threat. We're looking at the advocacy threat. We're looking at the familiarity threat. We're looking at the intimidation threat. So this was some of the things that we're supposed to actually look at. We're supposed to actually look at. So significance of the adhesion, we're also trying to say that it is important to ensure that the client and practitioner conduct themselves in a manner that there will not be any compromise on their respective roles. Tax practitioners are to conduct their professional work well and also to provide assurance that the work is done with utmost circumspect and due care. So please, this is how that the examiner was expecting us to do. And this is how far the good Lord have brought us for today. If there are questions, I'll take it. If there are no questions, then we have to bring the section to an end. I think we have actually been able to make good use of the 1 hour because we started somewhere 4:14 and we're closing at 5:22. It means that we have covered the 1 hour section. So please, if you have a question, I'll take it. If you don't have a question, then we'll bring the section to an end. Please, any question for me?
Please, are you going to share this document?
Okay, maybe I have to. I have not actually been directed. I'll ask Prof, but maybe we after our second meeting, if we have to look at one or two things before we conclude, before the second meeting, I'll get a response to that.
Okay, thank
Yeah,
you.
thank you. Any other question? Okay, if there's no question, thank you so much for your time this morning, and I wish you all the best.